Well, welcome back. We just finished going through deductions, and in this segment, we're going to go through the few steps to finalize the return and go through the state return. So let me share the screen to where we left off. This was at the end of deductions, and if I just click on continue, it then takes me to the other taxes screen. I'm just going to briefly describe a few of these things because they don't apply to many people. But this first one says additional taxes on qualified plans. This was where if you took that IRA distribution and you weren't 59.5, it was an early distribution, it's subject to a 10% penalty unless you meet an exception. And if you think you made an exception, you're going to want to go through this form here too. Nobody pays alternative minimum tax. This is household employment taxes if you have like a live-in nanny. Most of this you're not going to ever see here. So I'm going to skip that and continue on here. So here we have payments and estimates. There's times where you might extend your tax return, this top one up here. If you can't finish the return this year by April 18th, usually it's April 15th, but this year it's the 18th, you can file an extension. But that is not an extension to pay. You've got to estimate what you're going to owe and pay that in with the return, or otherwise they will charge you penalties. And this is where you would go to enter in that payment. Sometimes if you're self-employed, you know, most of us, we work for a living and our employers withhold taxes from us. But if you're self-employed, you still have to pay as you go, like everybody else. And you do that by making estimated payments. And if you made any of those, this is where you'd enter those. And then here's the state estimated payments. Most of these other screens you're not going to do. So we'll go look at miscellaneous forms. Here's one. If you don't finish the return, here's how you can file an automatic extension of time to file. If you owe a lot of money that you can't afford to pay, you could request an installment agreement. And if it's within certain parameters, it's automatically approved. It still will charge you penalties and interest. Okay. Here, if you didn't put in the IP PIN that we showed you earlier in one of the earlier things, you can go put it, you access it here. So that's what's on these things. And then last in this section here is the COVID-19 one. Now we've already done these. We've been prompted for doing this where we put in those advanced child tax payments that we received. And then I discussed the credit if you had to take time off of work due to COVID to care for yourself or somebody else during the first 3 months of the year. This is where you would get to that. And then we put in our recovery rebate credit or the stimulus payments that we got. So now that you're done with that and you hit continue, it's going to take you to the health insurance screen. And on the health insurance screen, this has to do with the Affordable Care Act. And it's going to ask you a question. Did you or your spouse or dependent purchase health insurance via healthcare.gov or the state marketplace? This is Obamacare. Now, if you did, you're going to click yes here. And by the way, if you did, you would have received this form called a 1095A. And on that form, there's several columns because probably what happened is they ask you to estimate how much income you're going to make in 2021, because this would have been at the beginning of the year. And then if your income was low enough, they were going to pay part of your premium. That's a subsidy. And this form is going to tell you, here's how much the premium would be. Here's your portion of it. Here's the subsidy we're going to give you. But then at the end of the year, you have to go reconcile that to be with the amount you actually earned during the year. And you might be entitled to a bigger subsidy, or you might have to pay some of it back. So if you click yes on here, I'm not going to do it. It'll take you to a screen that models that form, and you're going to put in the numbers that are on the form, and TaxSlayer will calculate that for you. In this case, I'm going to say no. And when I hit continue, it will tell you that you're all done. And now let's go get started on your state return. So I'll say get started. And it'll say, well, what state are you in? You can either go pick it on the map here, or you can choose it by a drop-down menu here and say Arizona. I'm going to say continue. And it's going to ask me, was I a resident? And we technically, when you first answered these, when we first created the return, it will skip all of these things. I happen to have deleted the state return so I could come back and show you some things here. But here's what you would go through. I would check residency. And now what Arizona does is it starts with your federal adjusted gross income, and then there's subtractions and additions to that income. So right here at the first, it noticed that I had a pension because I filed that 1099-R from Arizona State Retirement. And it's asking me here, said the taxpayer or the spouse had taxable pensions, annuities, or an IRA. Does the taxpayer or spouse qualify for an exclusion for US government, Arizona state, or local government pensions? And in my case, yes, because I have an Arizona State Retirement System pension. So I'm going to say yes. And now it takes me into this screen for these are subtractions, and says the first one, and pay attention to all of these, because the first one says, enter the qualified pension income that qualifies for exclusion from US government, Arizona state, that's me right here, or local government pensions. You can exclude up to $2,500 for the taxpayer or $2,500 for the spouse, as long as the spouse had a pension too, which in my case, Donna didn't, but I qualify that it's $2,500 or the amount of your pension, whichever is less. So if my pension was only $2,000, I can only exclude $2,000 from it. In my case, I think I forgot what we put in there, 20,000. I'm going to put in 2,500. But now look at this. It says if you had federal pensions, it says if you were a member of the uniformed services, you're able to exclude all of that. I'm not sure that this says it right here. They're still working on this thing, but so this enter the qualified benefits, annuities, and pensions for the retired retainer pay for the uniformed services. Uniformed services get to exclude all of theirs. So in my case, if that had been from the military, that pension, I would have been able, Arizona wouldn't tax me on any of it this year. This is a one-time year. It used to be $3,500, but this year they raised it to all of it. There's some other subtractions on the screen here. If you're a Native American Indian, you may not have to pay tax on some Arizona. It's kind of beyond the scope of this video to tell you about, but here's where you would put in the amount of wages to exclude from there. Most of all of this would not apply to anybody. So I'm going to say there's a couple of things. If you think you qualify for it, call us and talk to us and we'll walk you through it. But I'm not going to do that on this too. Okay, so I'm going to say, answer this. It's not the first time me filing, so I'll hit continue here. So it says, see, it says I've completed the Arizona return. I'm not completed, but it now asks me, did I pay any school fees for a dependent to a public or private school? This is going to start walking me through these Arizona tax credits, which are pretty valuable. There's several of them. There's the credit to qualified charitable organizations like St. Vincent de Paul, or this used to be the working poor credit. And you can it's a credit, dollar for dollar, of up to 400 single or $800 married filing jointly. There's another credit for schools or fees paid to school, like for their sports programs or things like that. I forget the exact amount of it, but you would want to put those in. There's a limited one if you donated to a military family relief fund. It's going to calculate all this stuff. Oh, you may have put money into a 529 savings plan for your kids or grandkids to go to college. There's a deduction for that. Donated to a school in Arizona. Here's the See, they still call this the working poor one. Now they call it qualified charitable organizations, but also there's a separate one for foster care, and they call it qualified foster care organizations. So I'm going to say yes, I've got some of these things. So let's walk you through a couple of these. So here it takes me to the main screen for the Arizona return. And here's basic information. I'm not sure I need to put anything in there. Maybe we'll just go take a look to see here. And this was the information they were asking me earlier. And if I had, well, okay, this is an important screen. So let me talk about this for a second. So we already filled some of this stuff in here that said, is this your first time filing an Arizona return? No. Am I enclosing a payment? No. Am I filing under an extension? No. Okay. But now look at this, qualifying parents or ancestors information that were claimed on the federal return. So if you've got a parent living with you or a dependent that needs special care, you're going to want to go in here and answer these questions, because if you can answer the questions that say you had to take care of more than 2 of their 10 activities of daily living, there's a whole special exclusion for that. Okay. This is rare, but don't skip this. Okay. There also may be other qualifying dependents that were on the federal return, that were not on the federal return, but are eligible for AZ purposes. These are if you paid for care, nursing home care for somebody, if you paid a certain amount, and the screen will walk you through it, enter in this information because you might be entitled to another exclusion for that. But I'll say, okay, we're done with this. Additions to income. Let's just see what else we might have here. There's nothing here that would do it. I just want to make sure I wasn't missing. But subtractions from income. This is the screen we were on earlier where I took off that $2,500 pension for me. I mentioned earlier that if you put in itemized deductions and you had a lot of medical expenses, Arizona allows you to deduct all of those. Now, Arizona still has the same high standard deduction that the federal does. So it's not likely you're going to itemize. But if you did, TaxSlayer is going to take into account some of that stuff. But let's look at the credit screen. This is the big one right here. Okay, so here's the first one, property tax credit. Now, this is not for many people. It's for lower income people. I forget the exact threshold, but it's around $5,000 or $6,000. But if you're only making that much money, Social Security does not count. Okay, we have a lot of senior citizens that come into our VITA centers because they're only getting Social Security or maybe a couple $1,000 other income, and they qualify for this property tax credit. So they come. And by the way, it's not just for paying property taxes. It's a renter's tax credit, because if you rent, part of your rent, your landlord is using to pay the property tax on that. And they have to give you a form 201. So there you would go in. So either you paid property taxes on the house you own or you paid rent. And if your income's low enough, you're going to want to go in this screen and answer the questions that are there. Here's the credit for qualified charitable organizations. And we're going to go look at this one because this has some special things. So it's going to say, by the way, be very careful here. You've got to answer this question. And it's kind of vague. It says, credit for contributions to qualifying charitable organizations, Form 321. This is the form that you're going to do. And you've got to say yes. Elect yes to complete it, because if you don't and you click continue and it prompts you for all of this information, you're going to lose all the information. So you want to say yes here. You may have had a credit carryover, and you would know if you did from your, and you would put it in here. So now we're going to put in information about the qualifying charity. Okay. So here we're going to say add a contribution. Now, if you followed my instructions earlier, you already added this on the federal return. Okay, because any qualifying charitable organization here is going to qualify at the federal level for a deduction. We'll see what to do with that. So we're going to say date of contribution. I'll just say, well, okay, we don't want to do that. It's got to be in the last year. 2021. So we'll say I made it on February 3rd. Enter the name of the charity. Okay, so I made contributions to a faculty foundation. Okay. Now it's asking you for the code, and you have to put this code in. And right here is going to say you can get this information right here. It'll open it into a new screen, but you've got to continue on here. And in here, there should be, it's telling you you've got to use, oh, here we go, list of qualifying charities. And now I made this contribution in 2021. So you're going to see a list for qualified charitable organizations and qualified foster care organizations. Mine was for qualified charitable organization. I'm going to open it up here. And it's all alphabetical. I know mine was called the Maricopa College's Faculty Foundation. So I'm going to scroll down here to the M's. And here it is, Maricopa College's Faculty Foundation. So that code is 22029. Okay, I happen to remember that. So I'm going to go into calculation there at 22029. Okay, and I contributed both $800 for me and my wife. Okay, now, by the way, I didn't put this on the federal return, right? Because I knew I was going to take it here. But so here we get there. Now, look here, this is odd. Usually there's a continue button here. There's not. But so I'm going to click on the back button and it takes me back to here. Now I could enter another qualifying charity or carryover. Now I'm going to hit continue and it takes me back to the credit screen. So here was one if you made contributions to public schools, you know, for like the football team uniforms or things like that. The school would have let you know and they would have sent you a letter. There's also another one for school tuition organizations, like the Catholic Diocese has a big tuition organization that you can do for that. Here's other certified school tuition organizations. Here's the foster care one. The military family relief is very limited and it fills up really quick during the year. But if you got in early enough, you may have that too. If you happen to file a multi-state return, remember earlier I had told you in the first thing that if you were a resident of 2 states, you don't get taxed in both states. Your resident state's going to give you a credit for taxes paid to another state. That's this one here. We won't go into that. So I've done everything here. Again, there's no continue button, but I'm going to hit the back button. Okay. And now let's see, what else have we got in here? Volunteer payments, penalties, miscellaneous forms. There's nothing else I need to do here. I'm done with the Arizona State return. So I'm going to say exit Arizona State return. And then now it takes me back out to here and I'm going to hit continue. So here it's saying it's triple checking all credits and maximizing deductions and doing all of that. And now it takes me to a summary. And you see these little carrots here or upside down. I can expand those to see exactly what was here. I don't like to use this screen to review my return. What I like to do, and we're going to go review this return real quickly here, is I like to view the return. I click on view return and it generates a PDF of the return. And so we're going to quickly go through this and make sure it didn't do anything funny on us. Okay, so I'm going to open it with Adobe Reader. So here's the return prepared by now. So the first thing it does is it gives you facsimile things of all the forms that you filled in. Like this was the W-2G for the gambling winnings for that. And then down here is that 1099 NEC that I filled in for my Schedule C business. So you can double check your input. Make sure you got all the boxes checked in here. Here was for my ASRS form. Now, this is interesting. See, notice that I'm over 65 years old, so it files as 1040 SR, which is supposed to be a simpler return, but it's really not. Okay. Now I'm going down and I want to check all the social security numbers, make sure I put everything in right. So it's saying here I was born before 57, but my spouse wasn't. Here's my grandchild dependent, right? Good. Okay. Now here I did have a W-2 put in there. I'm not sure why it didn't generate a facsimile of it, but at least I know that that's correct. I remember I had $50 of interest income from Vanguard. I had dividends from Vanguard, but look over here. See where it says of those 500, 450 were qualified. So TaxSlayer is going to give me a lower tax rate on that. And then here's where we put in Donna's Social Security benefits. And look, I warned you that some of it was going to be taxable. Oh, here's my pension and annuity from ASRS. And then look down here on line 7, this is the capital gain or loss. Now I'm thinking to myself, well, wait, that was 10,000 minus 8,000 basis. I thought that was 2,000. Oh, but now I remember there was a capital gain distribution on the 1099 DIV. So I'll show you that in a minute where that came through. Now it shows other income from Schedule 1, line 10. So I know what that is. But well, let's go look at Schedule 1, line 10. I'm going to scroll on down a couple pages. Here's Schedule 1. Let's see what's on Schedule 1. So first of all, it's my business income. That's income minus expenses, Schedule C. Oh, but look at here. I have to pay tax on all of those gambling winnings from Donna. So it's a total of $6,110. That's what flowed through to the front page of the return. Remember, I said I only get to deduct those if I itemize deductions, and I was way far away from itemizing deductions, like by about, $12,000 or something. So let's go back and finish looking at the return. So now then it says here I've got adjustments to income. Now, I'm not going to go to Schedule 1, line 26. I know what this is. When you file a Schedule C, self-employment, that you have to pay Social Security tax. It's called a self-employment tax. And they give you a small adjustment to income for some of that, because when you work for somebody else, you're paying half of the Social Security tax and your employer is paying half. When you work for yourself, you're paying both parts. Now your employer gets a deduction for what he pays. So this is a way of them giving a deduction for you paying for your employer part of your self-employment tax, if that makes sense. So TaxSlayer calculated all that for you. So then it comes down, and here's my big standard deduction right there, $26,450. Oh, and look here. See, that's that extra charitable contributions I got to take on there. Now, I didn't get to take it for the $800 that I paid for the faculty foundation, because if I take an Arizona credit, I can't double dip and also take it on the federal return. But that could have boosted me back up about, I think I would have gotten 600 then. Okay. So anyway, I get a big old chunk taken off of my taxable income here. Then TaxSlayer also calculated something called the qualified business income deduction. Since I was self-employed and I had about $4,000 of income there, I get like almost 20% of that as a deduction, another deduction there. So now it adds up all my deductions and it subtracts it from my adjusted gross income, and I've got to pay tax on $41,105. The tax is $42.25. And by the way, TaxSlayer went in and calculated that special tax on capital gains for that. And basically I'm in, a little over 10% tax bracket. So then that's my regular tax, but then here's that self-employment tax that I got to pay. So it adds it on there. So I got 4806. But now I had withholding. I had withholding from my job, W-2, and then I had withholding from my pension for that. So I had $5,000 of withholding. So if before we get to any credits, right, I want to reemphasize something. If I would have had non-refundable credits, it would have directly taken it off of here. Okay. But I didn't have any non-refundable credits. All my credits were refundable. We're going to get to them in just a second. So if I had no credits, it would have taken my withholdings minus what I owed, and I would have gotten about $194 refund. Okay, but let's keep going down here. Look what we got here. Refundable child tax credit, $3,600. That's for Asia, my grandchild. Now, what if I had gotten advance payments? Remember, I told you they paid out 6 months worth of advance payments, and I would have gotten a letter. Instead, my daughter got that letter because she claimed Asia in 2020. Okay, but let's say I would have gotten the full 1,800. I would have put that in that screen we were in, and then this credit would have only been $1,800. Now we go down here. This is the stimulus payments. They call it the recovery rebate credit. And I had put in there that Donna and I each got our $1,400. But see, last year, they didn't know that I was going to claim Asia this year. But I claimed Asia this year, so now I'm going to get the $1,400. So I'm going to get a pretty big refund right here coming up. Now, we're going to walk you through in just a couple of minutes about how you want that refund paid. Okay, so I've pretty much reviewed the return. I'll quickly look at the Arizona return just to kind of quickly show you, and then we're going to finalize the return and be done with this. So this is that schedule that showed my self-employment tax. This is where it shows interest and dividends, Schedule B. Here's my profit and loss from a business. Those were all those expenses that I entered in. Oh, here's car. By the way, let me show you. I'm going to go back up. See, it gave me a $140 deduction for car expenses. Let's look down here on page 2. See all of those things. I have to say it right on the tax return, how many business miles, how many commuting miles, and how many other miles. And I have to check those boxes. Now, these two don't have to be yes, but these two right here. Do you have evidence to support your deduction? If I said no here, I'm going to get audited, and because it's not, I'm not allowed to deduct car expenses, and that evidence has to be written. Okay, and so what it did is it took this 250 miles, multiplied it by, I forget, 56 cents or 59 cents a mile, and that was the deduction I got. Here's my capital gains and losses. So that part 1, this was short-term gains and losses. Okay. And then here's long-term gains and losses, right? And then this is a very confusing form because it's going to say totals for all transactions reported on 8949 with box D checked. I'm going to show you what that form looks like, and then a few things are going to make sense. Oh, here's this 150. This came from that 1099 DIV that TaxSlayer carried into here. Let's go on down. So I had 2,150 of long-term capital gains. Okay, here is part 2. And you can see right here, you must check box D, E, or F below. And one says, if the 1099B showed the basis, meaning they calculated what you paid for it, or you might have had a 1099B that didn't get reported, and it would be on that form. That goes on a different form here. But in my case, it's going to get reported right here in part 2. So, yeah, that's all I want to show you there. Okay. This is the form calculating my self-employment tax, which is basically that Social Security tax. Here's where it's calculating the credit that I got for Asia, the child tax credit. Here's where it's calculating the qualified business income deduction, right? And it went through and it did a calculation. It took my net profit minus the deduction I got for self-employment tax and gave me 20% of that. But TaxSlayer took care of all that for me. Here's the worksheet. If you want a headache, you can go calculate it all out. Almost done. Stick with me. There's plenty of worksheets that it shows you. Here's how it shows how they calculated the Social Security benefits that were taxable. Now we're on the Arizona return. And there's just a couple of things I want to show you. Remember, as I said, they start with the federal adjusted gross income. And then sometimes there could be an adjustment for capital gains. Remember I told you that was pretty complex if you got assets before 2011. But I said, call us if you think it's that. Here's where they took off the $2,500 from my pension. Now, look, here's a big thing. They're taking a subtraction for the amount that we had to pay tax on for Donna's Social Security. Arizona does not tax any Social Security benefits. So they're taking that right off of there. So now I'm down to $56,019. They give another exemption because I'm over 65. They take off another $2,100. They take off a standard deduction for me and Donna. So I'm down here to where I've only got $28,819 of taxable income. And my tax on that is $747. The first one they give me, and this is a non-refundable credit. It's $100 credit for Asia, the dependent tax credit. So that brought me down to $647. Now, see, I'm missing something on this return. So this is why we review it. Something I did, I should have gotten a credit from here. And that did not, okay, never mind. I'm sorry, I did. I'm reading this wrong. Let's go back up. Here was the non-refundable credit. That would have left me $647. Now, remember what I told you about refundable versus non-refundable credits? That credit that I paid to the faculty foundation is reported right here, but it only brings my tax down to zero. Now, I don't lose it. If I go a little bit farther on, I'm going to get to carry forward the part of the 800 that I didn't get to use this year, carry forward it to next year. Okay, but this brought my tax down. Balance of tax was zero right here, this field. So I had 900 withheld. I'm going to get all that refunded. And then here are the forms that take you through that. Okay, and down here, you're going to see where I get to carry forward. I only use $647, and I'm going to get to carry forward, I don't know, 140 of that's in there. So that's how you review your return. Oh, good. So now I've gone through the summary. I'm going to hit continue. We're almost done here. There's just a few screens where you're going to tell it how you want your refund. Oh, and it says here's some warnings. Okay. Advanced child tax credit may be missing some information because I put in zero. They said, just make sure. I know it's okay. I'm going to say continue. So it says, yeah, ready to file. Yes, I'm done with my return. Click that and say, yes, I'm ready to file. You can always go back into it because I'm not going to file this. Of course, it's a fake return. But I want to show you where you put in your bank information and stuff too. So I'm going to click continue here. And it says, okay, good. You're going to get a refund of $551.94. So it says here, choose how you want to receive your federal refund. I highly recommend that you use direct deposit. Okay. You know, a lot of people in the past have been very afraid. Oh, I don't want IRS knowing my bank account information. Trust me, they can find out your bank account information. Okay. But we found out during the stimulus payment that those who had on file direct deposit information, they got their stimulus way faster and way easier. But if you still want it, you could say mail a check. I'm going to say direct deposit. and hit continue. Maybe missed it. There we go. Then it's going to say state, choose how you want to receive your refund. I'll hit continue. I'm going to say direct deposit. Hit continue. Okay. Products and services. You're not going to want to pay for anything here. I don't know what it is, but I'm going to click continue here because I'm not quite sure what it says here. Okay. Yeah, it just confirms. No, we're not going to charge you any money for this. So now we're going to say sign and file. Do you want any part of your refund going towards savings bonds? I'm going to say no, but you might want to put it towards savings bonds for somebody. Now it says, do you want to deposit your full federal amount into a single bank account? You could choose two bank accounts. Maybe you want some going into savings and some into checking. I'm just going to say yes, most common. I got to put in some information here. Select account type, checking. Their routing number is 122105728. That's not correct, but whatever. And then you're going to put in an account number. Okay, I'm just faking it out here. And here we go. I could have added another bank if I wanted to do it, but I'm going to say continue. And which bank do you want to deposit your Arizona refund into? And I'm going to say, yeah, choose the Wells account, continue. Then, okay, this is important right here. And I told you at first, you need your 2020 income tax return because it's going to ask you a couple questions off of that. Okay, so this screen right here is saying ID information. Some states require it. Arizona does not. So you can say, I just do not want to provide, or if you want to provide it, you can. Spouse, I do not wish to provide. Continue. Now, here's where it's got to confirm your identity. And you're going to say, yes, I have my 2020 return with me. If you say no, I think it's going to take you and ask you a bunch of other questions, creepy kind of questions that only you would know to verify it. So hopefully you have this return. And if you say, no, I didn't file a tax return, then it's going to ask you some other questions. But I'm going to say, yes, I had it. I'm going to say continue. Then it's going to ask you, what form did you file? Now, a minute ago, I showed you I was filing the 1040 SR. It's in the upper left-hand corner of that tax return. So look on the 2020. Go look on the upper left-hand corner and say, I'll say last year I filed see, it even shows you a picture right there. Hit continue. Then it's going to say, this will determine how many 2020 AGIV. Did you and your current spouse file a joint return? Yes. Continue. Now it says, enter your 2020 adjusted gross income. That's from your last year's tax return. It tells you it's on line 11 of Form 1040, and you've got to put this in. And then when you file a return, it's going to match it with the IRS. And if it doesn't match, it's going to reject. I am going to stop right here because if I hit continue, it's going to then have you go e-file the return, and you're pretty much done. And when you do, let's see. Let me see what happens here. I better put a little higher AGI. This is just warning you to double check it. It didn't say it's wrong. It's just saying it's what I just warned you. IRS is going to check it. Oh, now you're going to create a PIN number for this year. We usually just use zip codes. So it's something that we'll remember here, but I'm going to hit continue. I want to make sure I take you all the way to the end. So it says, yeah, we're almost ready to file. Really good. Sign and e-file your return. Last step. I don't want to file it now, but I think when I click file, it's going to make you type in you and your spouse a signature and give you some warnings. I want to make sure I don't. Well, let's try it. Uh-oh. I didn't really mean to e-file that. It's going to reject, and it's no big deal. Okay. But so there it is. Please be sure to, let me stop the sharing here. So this is going to be the end of our tutorial for do-it-yourself tax returns. Please be sure if you have questions, you should be able to contact the partner, the VITA partner that provided you with the link to access this software. Don't hesitate to call us or contact us, and we'll help walk you through those things that we're trained to do. And so thank you very much for listening to this, and especially if you listen to all 5 sections. Hats off to you all. Goodbye now.